So Cyprus, once again all over the business news, rejecting that plan for a bank levy. What happens next is the big question. Matthew, I'm not sure if you can answer it, though, can you? Really?
It's unfortunately not. There's no obvious plan B after those proposals were rejected by the Parliament. Banks in Cyprus now dependent on emergency funding from the European Central Bank. So, well, what are the various options for Cyprus? More in this report from Stephen Carroll.
Bank levy or no bank levy, Cyprus is running out of money. It needs 17 billion euros to get its finances in order and clean up its banking sector. Its European partners have offered a loan of 10 billion. In exchange, the government pledged to cut 1.2 billion in public spending and planned to raise another 5.8 billion euros from the controversial bank levy. With that plan now on the rocks, Cyprus is in a difficult situation. This deal was hard won, but the government could go back to its international lenders and try to renegotiate the bailout to make it more palatable to its politicians. If it can't, it'll have to look for that money elsewhere. Cyprus's budget for 2013 forecasts spending of 9.5 billion euros and revenue of 7.6 billion. That included a range of tax increases and spending cuts. Coming up with another 5.8 billion seems unlikely.
The Minister of Finance of Cyprus said that they have a plan B and alluded that they may nationalize certain pension funds and may try to speed up privatization revenues. But I simply cannot believe that these alternative sources would be sufficient to fund the Cypriot government.
Another option is Russia. Moscow has already lent Cyprus 2.5 billion euros and could be convinced to give more, particularly for a share in its gas reserves. If there's a run on the banks in Cyprus when they reopen, the government will be unable to recapitalise them. If the ECB doesn't step in, it could force a banking collapse and Cyprus's exit from the euro. A catastrophic scenario for the rest of the eurozone, once again stoking market fears about the future of the single currency.
Now, we've already heard that the Cypriot finance minister has arrived in Moscow. What's he actually hoping for, though, Matt?
Well, as Stephen was saying in that report, first objective is trying to ease the terms of this 2011 loan, 2.5 billion euros that Moscow gave to Cyprus. Also speculation that Cyprus could be looking that way for more help. For example, there's been talk, unconfirmed talk, that the Gazprom bank, the financial arm of that huge energy company, might be interested in taking over, recapitalising one of the struggling banks there in Cyprus.
So what's been the official reaction then from the Eurozone?
Well, there's a mixture of bewilderment and disappointment. The Dutch finance minister, Jeroen Dijsselbloem, he heads up the group of Eurozone finance ministers. He said that the offer to Cyprus still stands.
It's disappointing, but at the same time, it's clear that the offer from the Eurozone and the Eurogroup to Cyprus still stands. The conditions, the size of the package and the need to cut debt, they also still stand. The ball is now in Cyprus's court.
Very complicated, isn't it? Presumably the market's still dominated by this too?
Yeah, that's right. It is still, although it's a very small economy, of course, it's still having a big sway on the markets. This is what's been going on in Asia. The Shanghai Composite doing pretty well. They're up 2.3%. Other things taking over there. The Nikkei that is closed. That's why we haven't got that there. It's a public holiday this Wednesday in Japan.
So that public holiday, but one man's working, I'm sure, a new man taking over the country's central bank.
Yes, the new man will be giving a press conference despite the fact it's a public holiday. The former governor of the Central Bank of Japan left his job after 5 years on Tuesday. The new man is Haruhiko Kuroda. Well, France 24's correspondents in Tokyo have been finding out more about who he is and what we can expect.
It's time to bid farewell to Masaki Shirakawa. After 5 years in office, the governor of the Bank of Japan is handing over to Haruhiko Kuroda. The 68-year-old Kuroda, former president of the Asian Development Bank, has one goal: to stop deflation, and one tool at his disposal: aggressive monetary easing.
He will pursue monetary easing that closely resembles the policy pursued by the US Federal Reserve in the years since the Lehman shock.
That programme will go down well with Japan's Prime Minister Shinzo Abe, who supported Kuroda's candidacy. The two men will try their best to bring inflation up to 2% in 2 years, but it's an ambitious target.
It will be very difficult to achieve that goal with monetary and economic measures alone. Deflation has persisted for the past 15 years, so you also have to change the way Japanese people and companies think.
Abe believes the process will begin with a rise in wages. But for now, companies are reluctant to pay their employees more. One of the few exceptions is the convenience store operator Lawson, which recently implemented a 3% pay rise for most of its employees.
If all other companies followed our example, we believe consumption would rise. In the long run, more consumers will shop with us, and we will, of course, benefit from that.
The central bank's new governor, meanwhile, is expected to start buying long-term government bonds and expand the bank's asset purchasing programme, measures that will put downward pressure on the yen and possibly ignite a currency war.
And another country, that's the word, facing big economic challenges is the UK. Finance Minister there presenting his annual budget this Wednesday.
Yes, that's right. George Osborne we're talking about. He's been in the job for 3 years and he made it his mission to cut Britain's debt when he came into office, and he thinks that would return the country to growth. But there's been a few problems on the way, not least losing the country's AAA status last month from one of the ratings agencies. Well, growth in the UK has been the real problem and very hard to come by. Now, as you can see there, the forecast for last year is, at least the figure for last year was a slight shrinkage. Now, the forecast is 1.2% growth this year. That number will be updated today by the Office for Budget Responsibility, likely to go down, analysts think. And debt, meanwhile, is continuing to grow. The proportion of debt to GDP in 2012 was just under 75%, and it's going to keep going up, as you can see there, only falling in 2016-17. Maybe even that will be pushed back. We'll hear more from George Osborne later. The only bright spot really has been on unemployment. UK unemployment has actually been remarkably resilient during this whole crisis, falling. You can see how it compares to both the European average and countries like Spain, which have the highest 7.7%, and that's even been falling a bit.
And let's stay in the UK. One of Britain's most well-known car brands could be shifting some production anyway outside.
Yeah, now this is Bentley that we're talking about. I'm sure you've got one of those parked in the garage
Several.
at home, haven't you, Stuart? Now, they've been having a pretty good time recently. Sales up 22%. They've got a new model coming out, and there's talk that it will be assembled at a plant in Slovakia. And it would be the first time a model from Bentley is built outside the UK and outside its Crewe factory in the north of England. Of course, Bentley now owned by the German car giant Volkswagen.
I noticed your Daimler in my spot this morning in the car park, Matthew.
I will move it out.
Now, one company has seen its share price drop after it's revealed a little bit too much. Tell us what this is all about.
That's right. Now, this is a story about a company called Lululemon, and they make these rather fetching designs of yoga pants, and they're quite high priced as well. But they have a problem, which is that, well, they called it an unacceptable level of sheerness. Now, in everyday language, that means they were a bit transparent and a bit too revealing. They started hearing this from customers who started bringing them back. Well, they've confirmed that there is a problem. They have taken them off the shelves. Now, that affected their share price because, of course, that means less stock to sell. That means they're probably not going to hit all their sales targets. Shares were down almost 3% in Tuesday's trading session. So beware. Check the label on your yoga clothing if you don't want to.
You were telling me you found them very comfortable.
Very comfortable, but a bit embarrassing.
Snug fit. Matthew, thank you very much. The latest from Cyril. He'll be here after the break.